Tuesday, January 30th, 2018, Monaco 64, home of alternative economics and contrarian views, early market updates, and I also want to talk about this book here, America's Great Depression by Murray and Rothbard from the Austrian School of Economics. I read this book years ago, and I'll just go briefly over it, and I think it's important to know about this, especially nowadays and what has been going on in the last 10 years since the crash of '08. So I'm a little later today. It's just gone past 11:30 London, so it's 6:30 a.m. Eastern Standard Time. Markets have been very interesting. One thing I noticed, of course, yesterday was disappointing for precious metals. Getting immune to it, really. I've been immune to it, even though it's frustrating for, the last 16 years, even though gold has gone up from around 320 when I first started investing in gold. It's always a struggle. There's always kind of a force out there trying to keep the price of gold from doing what it should do, in my opinion. We even saw that a few traders from the big European investment banks were arrested yesterday for spoofing the futures market in gold and silver. And what does spoofing mean? Because I know what that means. And a lot of people do a lot of spoofing in the markets, in the futures market. And I worked in the future market for 20 years. Basically, it's like before you had electronic trading, a big trader in the pit could come in and go, I want to sell 1,000 futures, and then he would pull the offer, but while he put that 1,000 on the offer, people would say, oh, someone's selling 1,000. And that would get people ahead of him to sell. And then he would just pull the offer and then buy it for less. So that's what really spoofing is. It's electronically, it's more difficult to know who's doing it. And it's basically showing huge size that you're not prepared to trade, basically to scare market participants. But in my opinion, it goes a lot higher than just a few traders spoofing the futures market. It's more the central banks and the bullion banks, the way they treat gold, and the way the mainstream media also portray gold as just a commodity, even though the most important banks, JP Morgan, Goldman Sachs, Deutsche Bank, UBS, Barclays, they're bullion banks. Why, if gold is not an important monetary metal, why do these banks and central banks still deal in it? But at the same time, they keep saying that it's useless, and you get people like UBS. That's been going on for years. The bullion banks make their forecast for the year, and like I saw a few weeks ago when gold was around 1320, UBS said, "Oh, our forecast for 2018 is 1325." They make those kind of predictions. They rarely ever call for gold and silver to go up, but anyway, so it was disappointing yesterday. We had spiking interest rates. The 10-year yield got up to around 272. We had falling stock market, and then gold was holding fairly well early on, but then it just came off. And overnight, the same thing. This morning, we got down to 1334, but I hadn't watched the markets until half an hour ago, and I looked at my mobile phone at the app that I use, and I saw gold was at 1345, which was a good, nice surprise. So yeah, right now as I speak, gold is at 1344.20, so it's up 4, and it's rebounded from a low of 1334. So that's pretty encouraging action It hasn't been able, they haven't been able to drive it lower. Silver's made a low overnight of 1707, but it's now at 1723, and it's up 0.5% or 7 cents. So encouraging action by the precious metals, and the Dow futures is down 150 right now at 26,287. It's been down a lot more. It's been down to 26,144. So it's been down over 200 points, or about 300 points earlier on today. So that's quite amazing. The S&P is down 12, down 0.5% at 2840. It was down about 22 earlier on. The Nasdaq is down 31 at 6954, down 0.5%. So yeah, pretty sharp moves in the stock market. Let's have a look here on the hourly chart. Yeah, we spiked. Yeah, we made a huge spike lower here around yeah, just before London opened actually this morning. So interesting to see what happens later on today. So stock market under pressure. I've noticed that the bond markets have recovered a little bit. So the 10-year yield has come back down a bit now. It's at 269. Yesterday we got up to 262. Just going to check what it did overnight as well. We got up to 273 overnight. Yeah, and actually that was we got up to 273 yesterday. Overnight the high's been around 271. So interesting that the stock market is rebounded fairly well from that quite a big drop earlier on in Asian trading. Currency-wise, we're seeing the dollar. Yesterday we had what I'd say is a little bit of a dead cat bounce. It's a market tech terminology. The dead cat bounce is a market that's been going down a lot, and then it rebounds, and everyone thinks, oh, the market is going to go up now, but it just goes back down. It's a dead cat bounce. This morning, yeah, the dollar's weaker again. It's down 1/3% against the pound at 141.15, down 1/3% against the euro. Euro's up 45 pips at 124.27, and the dollar's down another 1/3% against the yen at 108.56. So things not looking great for the dollar. Crude oil is down a bit, about 1% at 64.90. So very interesting. In the news, of course, there's a lot going on politically in the U.S. It looks like the House Intelligence Committee has voted to make the FISA memo public. We'll have to see what happens there. And I read also on Zero Hedge, FBI Director Wray shocked to his core by FISA memo. McCabe removed next day. More heads to roll report. So a lot going on there at the top of the mountain, so to speak, in D.C. between Trump, the shadow government or deep state. Is it distraction? Maybe. Let's keep an eye on the markets. Well, back to that book, America's Great Depression. Of course, it's about the 1930s depression. And Murray Rothbard was an Austrian School of Economics economist. He wasn't Austrian, he was American. And he's, as opposed to the Keynesians, he believes in free market, capitalism, small government. And that's why I think it's good to read this book, because the Keynesians, for example, Mr. Bernanke, Professor Bernanke, and other PhD economists, they blame the gold standard for the depression, the fact that Europe, a lot of the European countries and the US had to abandon the gold standard domestically for the US and internationally for the Europeans. They blame the gold standard on the depression. And Murray Rothbard basically disproves this. I'll read here a little bit from the introduction. It says, Rothbard produced in 1963 his own explanation, which turned the conventional one on its head. The severity of the Wall Street crash, he argued, was not due to the unrestrained license of a freebooting capitalist system, but to government insistence on keeping a boom going artificially by pumping in inflationary credit. His book is an intellectual tour de force. It has stood the test of time, with success, even with panache. So, and before that they say, for half a century, the conventional orthodox explanation provided by John Maynard Keynes and his followers was that capitalism was incapable of saving itself, and that government did little to rescue an intellectually bankrupt market system from the consequences of its own folly. So in the book, I mean, I read it a long time ago, and I'll probably even read it again to refresh my memory. But he explains basically that all the government intervention did not just start with FDR after, 1933, but it actually started with the preceding president, with his predecessor, Herbert Hoover, who was supposed to be a free market guy. But so he totally disproves this Keynesian idea that the government needs to be involved and needs to save capitalism and free markets. It's the other way around. It's governments, by interfering and trying to smooth things out, that create all the problems. And why is it important today? Because they've done the same. They've been doing the same thing since 1987 with the with the Greenspan put after the stock market crashed. He flooded the market with cheap money. You've had the Latin American crisis in 1994. They flooded the market with money. They bailed out Mexico. The Asian crisis, LTCM, all the time, the Fed, the government intervening. And the big one up until now has been the 2008 crisis, where the governments of the West had to bail out the banks because they were reckless. And how do they bail them out? Well, with the government interference. The government's borrowing money on the back of the taxpayers and rewarding reckless behavior by speculators, by borrowers, consumers, by bankers. Everyone is to blame, but the government basically smoothed it out. The best thing they could have done, according to the Austrians and Mr. Rothbard, was not to interfere. But it's too late now. They saved the rotten system. The rotten system is getting bigger and bigger. So I don't think we've seen the biggest crisis yet. When it's going to be, I don't know. But I highly recommend this book. You can probably find a free copy PDF on the Mises.org website, MISES.org. The Mises Institute is the home of the Austrian School of Economics in the US. Highly recommend it. So if you enjoyed this video, please like, share it far and wide. Subscribe to my YouTube channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.